Hi, my name is Lawrence Linker. I'm the co-founder and CEO of XD Academy. I've gathered great friends here today to talk about crypto.
There's no way to read everything. It is just really, really interesting right now to see the way the different jurisdictions are either accepting crypto or pushing back against it.
There was always a chance that actually crypto would go away, that it just wouldn't find any adoption.
Crypto is opening up to people who have regular access to, let's say, the banking system. Because that's what it's for.
We pop like the Crisco, got rich off the crypto. I'm winning again, you can like it or not.
Hi everybody, Lawrence Linker here from XD Academy. When I first started learning about crypto 3 years ago, what I found most helpful was just having casual conversations with people that I knew that I could learn from. I want to bring that experience to all of you by inviting friends of mine to come and talk about their unique experiences in crypto in a casual setting. Today, I have Markus Thielen from Matrixport, also author of the book Crypto Titans, which you should all be checking out. I have with me Stephan Lutz, my old boss, CEO at BitMEX, and of course, Chris Holland, lawyer and partner with Holland and Marie, now known as HM. I'm really excited to catch up. I had a chance to speak to each of them individually last week. Those videos should be published on our channel, so you can check those out. And now I want to get everyone together for a group conversation where we can dig even deeper into the subject of crypto regulation and how it's affecting the industry today. Markus, we'll start with you.
Okay.
What's going on in crypto?
Well, a lot is going on, right? Every day something new is happening. Of course, we heard a lot about some US institutions getting into crypto. There have been long preparations. I think the odds are quite high that an ETF gets approved from BlackRock. I think that's going to be the new theme. It's going to probably attract a lot of inflows. I would suspect, $10-20 billion within the first 6 months. And I think BlackRock also set up an internal, a private ETF already, almost like a year ago. So they have a lot of experience with it, and I think that's going to be the new driver for the market.
And you said that you expect that this ETF will be approved.
Yeah, so BlackRock itself has a 575 to 1 chance to get it approved based on their historical track record of getting ETFs approved. And I think it's probably that the SEC wants to be seen as still a little bit progressive if it's in a right compliant environment. I think it's probably going to drain a lot of Bitcoins and a lot of money from other less regulated exchanges, and I think that's kind of what the SEC probably wants. So I think the SEC also wants to be seen as really, offering a little hand to the crypto industry. I think because again, Bitcoin they have already approved. It's not a security, it's not an issue. So I think it's going to go ahead, and I would assume by September, October, they're very likely going to approve it.
And average retail people will be able to buy the Bitcoin
exactly,
ETF in their 401k.
Yeah, in their 401k, I think Fidelity, you can already do this. Some other, of course, issuers have come out of the woodworks again and said, okay, let's apply for it again. But I think here the interesting aspect is really that over the last kind of 4 bull markets we had in the history of crypto, crypto itself has made new highs because of Bitcoin. So Bitcoin is the only constant that has made new highs. And, without taking too much fire away, the tokens that we did really well in 2017, they hardly came back. And I would assume some of the tokens that were really the high flyers of the 21 bull market will also not come back. So Bitcoin might actually be your best shot to really having exposure to the industry really. And, might be a good value proposition.
Okay, fair enough. Stephan? How are things for you?
Things are pretty well at the time for us in relative terms, I'd say. I mean, I guess our viewers as well will know the history of BitMEX, right? But we have come back since the end of last year, so after the FTX meltdown. And I like what you say because we are, frankly, a Bitcoiners exchange, right? So you trade on BitMEX, you have traded on BitMEX if you are basically a believer in Bitcoin. And those are our most liquid products. The other non-Bitcoin products are not that liquid on BitMEX, basically. And we have gained market share back. We have gained volumes back on lower level, of course, not as in a bull market, but we feel we are pretty well positioned, especially as we focused back on our core values and our frankly competitive niche, which is, maybe we can come to that later. I see the developments in the US in particular a little bit with a laughing and eye and some tears, because it does good for crypto overall. And for an average investor, I think it's sometimes even good news, but actually it goes in a completely different direction than originally the inventors of Bitcoin and all the Bitcoiners thought it will go.
I'm curious as to how everybody here feels about the altcoins, because altcoins are taking a beating right now, but it's always been my view that the ability for people to buy altcoins, experiment with new models within the crypto ecosystem is a positive thing. Is that something that you support, or is that, and how do you think that, and Chris, I'll address this to you because you haven't had a chance to speak yet. How do you think the regulators across the world look at this view?
Thanks, Lawrence. I have no strong views on altcoins whatsoever. I mean, as a lawyer, they're all kind of products, and at least in Singapore, Bitcoin and Ethereum and all these altcoins are probably digital payment tokens, so it's sort of neutral from how they are regulated. The one special nuance, I'd say, is any sort of privacy coin or any coin that has higher risk for AML, CFT, that is going to have special considerations from regulation side. But as far as I'm concerned, the more coins that, advance the industry, the better.
I totally agree. I mean, it's a whole ecosystem, right? I mean, for me, Bitcoin really is the standard, or let's say the reserve currency of the crypto ecosystem. So that's one. And Bitcoin has been invented for a very specific purpose. And all the altcoins are going into other directions, right? So it's good to have them. Frankly, it's not about that we should get rid of them, not at all. But in this bear market, what becomes clear, as in the previous bear markets, is as an altcoin, you need to know what your business case and your use case is. If you have that, you can prevail, you can perform, you can be there, so you can come back even if you really have value to offer. If it's something that people understand, that people want to use, and that's safe and sound in terms of technological development and how it works, then nothing bad about altcoins. I think what we see is that a lot of the schemes that are Me Too schemes, they will vanish because they don't provide any value. You go to the original. That's why, for me, Bitcoin and Ethereum are strong in the ecosystem, because they're originals, right? So if you want to have something, and if you want to have safety, security, you have a flight to quality in such bear markets. And this is what we see. That doesn't mean that all coins will go away. For me, frankly, it doesn't mean that there won't be any new coins in the future. No, not at all. But we have basically cleanup of the industry right now.
I don't think altcoins will go away, but I think there will be new ones coming, and those will rise again, but not the old ones. I think I would even claim that the Solanas of the world are going to have a very tough time to really come back and reclaim their previous highs, because it's going to take a lot of money, effort, marketing machine. And maybe the Solana Foundation is not willing to spend the money. So, and I think it could be really like that money, and somebody else comes along with a newer project, with a newer protocol, a whole new machinery built around it, and maybe more use cases and everything. And so that's why I think historically a lot of those coins, those altcoins that came and went basically, right? And nothing really happened to them. And of course, a lot of were holding them, but rarely have we seen really in one of the previous bull markets those coins making a new high, except of course for some of the, the major ones. And I think that's kind of like what we're focusing. But again, a new theme will likely develop, and this new theme will be driven by new altcoins as well. And those probably are the ones really to gain a lot of traction. But I think the altcoins are like history that we know right now.
Yeah, I think you brought up Solana, which I think is an interesting case, right? There was a view at some point, maybe last year, let's say, where we of course in crypto we always talk about there's Bitcoin and everything else, and then even in this conversation today, you kind of hear us talking about, well, there's Bitcoin, Ethereum, and everything else. So Ethereum has managed to win its way into that rarefied circle, and I think last year a lot of people were saying that now it's Bitcoin, Ethereum, and Solana and everything else. And it doesn't quite seem to be panning out that way for them, which is probably discouraging to a lot of other, hopefuls that have nowhere near as much as Solana has going for it. But okay, let's dig in deeper a little bit more to specifically the regulatory stuff and where we're at today. So it's, end of June 2023, a few weeks ago, the SEC started suing everybody. This already feels almost like old news, but
it is a great time to be a lawyer.
I
all
bet.
the lawsuits, It's really wonderful days.
Yeah, I bet. What do you make of this, Chris? Have you read the complaints, and what was your feelings about?
I have not been able. I mean, there's too much. There's overload from a legal perspective, right? What's going on in Hong Kong? What's going on in the U.S.? Different parties being sued every day. Do Kwon just got sentenced for 4 months in Montenegro, and then he's going to be, put somewhere in some other country. And what's the lawsuit going to be about? So there's no way to read everything. It is just really, really interesting right now to see the way the different jurisdictions are either accepting crypto or pushing back against it, the way businesses are focusing on jurisdictions where they want to be, and places like the US where they probably want to be, but it is so difficult, what they're going to do about that. From a lawyer standpoint, you want to help clients achieve their goals, but also talk about rationalizing the business. Are we going to have a presence anywhere? Are we going to have just hubs? How are we going to approach this? Are we going to, in Singapore, they really want to be careful with retail. So it's a really interesting time where I'd say 5 or 6 years ago, crypto regulation and just best practices was an open space and everybody was coming up with their own standards. Now every country is really getting in the weeds.
Well, not on a technical level. For me, what I find interesting is really how it's approached, and sometimes it feels a little bit, not recognizing what crypto really is, because what you see in the US and for me, the push that we see in the US is not so much against crypto as such. You see BlackRock going for an ETF, you see institutions getting into that, so they try to treat it as if it's just another equity. So, and they push it into the classical financial services players. Well, frankly, that's how it looks like. Maybe it's different, but this is how it feels the last couple of months. For good or for bad reasons, different matter. They can do whatever they want. It's a free country, so to say. If you look at the EU, they're doing a slightly, kind of similar kind of game. If you look at MiCA, the Markets and Crypto Assets Regulation, to a lesser extent, they're a little bit more technology neutral. They don't push for adoption by larger institutions yet, at least. So you can prevail if you basically adopt your business and operating model to that of a bank or a larger broker, frankly, or custodian or whatever you do in the virtual asset space. For us, Hong Kong does a slightly different pivoting. They seemingly have gotten more into the technological aspect of it, still very strong on retail protection. I mean, how they go into how much you need to store in cold storage, etc. That's really going that space. But they seem to be a little bit more open and play that card of, hey, as long as you don't screw retail investors and there is a little bit of protection on a meta level, technologically you can do whatever you want, and please integrate into Web3, because of what you see in Hong Kong is a lockstep basically from the regulators of crypto and Web3. I mean, for some it's the same. Some say it's the same word. It's just different words for the same thing. For me, it's slightly different. Web3 is more about, in the end, about use cases, and crypto is the enabling factor of that, the enabling technology. It's my personal view.
I totally agree. Sorry, can I interrupt? I just gave I talked to the Bank of Singapore employees yesterday, making that exact point, and I think that I wish more people understood that. But please go ahead. Yeah.
Well, happy that that we are in sync. No, and then you see the UAE basically, which for me is a very business oriented approach. So they want to make sure that they don't, frankly, piss off anyone else internationally, but they're open for business. It's a little bit, I would say, where Hong Kong was a couple of years ago. And so you see pretty different directions of where they're going. And I guess that will lead to what you see in the market, where is going where. and who is doing what. I believe that especially in Hong Kong, you will hopefully see again a lot of technological innovations because it's a hub open for that. In the UAE, all other things being equal, crypto, like next year, we don't know what happens. A year ago, Hong Kong was completely anti-crypto. So, but in the UAE, it's more like you will see some interesting business models, I guess, and people will set up shop just to have something and to be regulated somewhere. Europe and the US clearly go into favoring larger organizations.
Yeah, I think one thing, or maybe the most important thing to really just understand is that there was always a chance that actually crypto would go away, that it just wouldn't find any adoption and everything that, the regulator would really care, and it just sort of like would all die down. But I think with the regulators now really around the world kind of setting the level playing field, I think it's a sign that it will not go away, right? Because once the regulator kind of approves certain parts of it, I think a lot of people can actually engage with it. And I think this is the key difference between previous bear markets where there was always a chance it might go away. And, there is around like 420 million people who hold cryptocurrencies. More than 600 million people have downloaded crypto trading apps on their phone. So I think the regulators also realize there's a lot of people who are interested in this stuff, right? Some people might not agree. And this was also like a message I took away from, to doing a lot of research on the subject that, no matter what your view is, if you believe in it or not, the one thing you take away is really that there's so many people involved and are interested in it, and it will just not go away. And I think that is really the key difference. And, without talking already about the Middle East, it's not only, Dubai or Abu Dhabi, but it's also more and more Riyadh that people talk about, right? Because they have a lot of money from the Sovereign Wealth Fund. They want to change their economy from a petro economy more towards kind of like a Web3 economy as well. So I think there's a lot of stuff happening. And I think it's really then also these top-down politicians, are helping really drive the narrative with the regulator and providing the level playing field. And I think that's why it's very important to understand this debate is very different than a few years ago, because crypto could have collapsed in itself because there's not much interest. But of course now the regulator is setting the level playing field. And I think that's why we're having these big Wall Street institutions coming back now, because they suddenly feel comfortable. And if they feel comfortable, the big institutions will feel comfortable to invest in it and putting it in front of their clients.
Markus, can I ask you a question, though? In terms of crypto going away, I definitely think when I learned about crypto the first time, I thought it was about you and I being able to transact independently of any intermediary, and that we had a freedom issue and also reduced cost without the intermediary. When I hear about BlackRock setting up an ETF, I'm wondering, okay, what are all the costs involved in that, and how efficient is that versus someone just buying a Bitcoin on their own, right? And I wonder if crypto, when we say crypto is not going away, well, we're establishing a lot of intermediaries, which are then going to add a lot of additional costs to transacting it. Does that then damage the use case of crypto if it's all done the same way traditional financial instruments have moved?
Actually, I think quite the contrary, right? Because I don't think there will be many costs, involved or layered on top. I think it's going to be probably structured extremely efficiently, right? Because we're going from grayscales 2%. You cannot really redeem your money, right? Somebody has to hold the bag of these shares that cannot really be given really back to the issuer. Versus with an ETF, it's going to be relatively low cost. It's probably going to be like 70 bips. So there's already 1.3% savings. And I think when you look at all these, people who lost money through like scams or, sending money to the wrong address and everything, I think this is all going to be like eliminated. And I think the key thing is really, and I started to look at a little bit like old school Warren Buffett, right? As long as you have a portfolio that resembles the US economy and the US economy grows, you can participate in it. And I think with Bitcoin, it's very similar. As long as you hold your Bitcoin, because the key thing is that you don't need to trade much, right? You just buy it, hold it, as if you're like a pension fund in Nebraska or wherever, and you just hold it and you have your exposure, and you're probably going to feel relatively comfortable that you can, liquidate it, that you can sell it, that you can just, that it's stored with Coinbase custody and everything, and it might not add much cost to you in terms of the exposure you get, right? That's how I would look at it. And I think the rest other people need to do, right? Because again, if BlackRock is able to attract like $10 billion, $20 billion in inflows, I think, we're getting a new revival of, those altcoins, for example. New coins will come, and I think they can maybe build then the ecosystem and see if they can build like a competitor, right? I mean, Ethereum took like a long time, but it is sort of like a competitor in some sorts as well.
From my point of view, currently many things are commingled. Frankly, as a, let's say, crypto believer, so I went into crypto personally in 2012 for the technology and what could it do, and actually even some of the ideological theories behind it. I see this a little bit more skeptical because, frankly, if I buy Bitcoin, I do self-custody, I go to any exchange, I know what I do. It's much more cost efficient than buying a BlackRock ETF. Sorry. I mean, it's low cost compared to actively managed funds, of course. But I'm investing into stock markets and other financial assets as well. And the only thing I'm worried about is transaction costs, because the rest is the random walk. I'm over exaggerating the point here. So for example, BitMEX was founded to even drive down that cost further. So buying Bitcoin via perpetual swap is much more cost efficient than even going out right on spot markets. You have other risks you need to take care of, I think, and this is something I don't want to lose, right? At the same time, I recognize that there is a value for larger organizations coming in, especially for the broader public who wouldn't adopt the self-storage custody solution for their Bitcoin trading. They don't know who to trust. They can't do research, right? Then you get big organizations who do the research for you. They basically cut off the lower end tail risk, like being scammed, et cetera, et cetera. And this has a value in itself. This drives adoption, of course. But this is no different. You could take an S&P 500 ETF as well. So there is no real difference. So it's more, frankly, I think it's more a marketing gag. If you really are for your portfolio management, yes, you can have a little bit more of crypto into that to diversify. But frankly, crypto currently, or Bitcoin at least, is strongly correlated with US markets, right, and monetary policy. So you can do it in a different way. So if you then go for cost efficiency and the real use case of it and the ideological theories behind it, actually you wouldn't hold it with that. So I see the use case. I see it rather going into tapping into other customer groups, into other investor groups. This absolutely does the trick, but at the expense of turning Bitcoin or crypto into like a financial asset like real estate or stocks, which might not be bad. I'm not arguing against it, but it's not basically where we come from as a firm and where we have started and where we still feel there is a lot to do in the original sense of the meaning in crypto proliferation.
I was having a chat with a friend of mine recently about like, what do you invest in? And he told me, for reasons that will soon become obvious, I won't reveal who this is, but he says, well, I hold gold. I like gold a lot. And I said, oh, what instrument do you use? Mm-hmm. And he goes, instrument. He goes, he literally has bars of gold that he keeps in a safe in his house, right? That's not for everybody. Bitcoin often gets compared to be like, maybe it's like a digital gold, right? Maybe we live in there'll be a future where not everyone wants to manage their own private keys or have their wallet, right? For most people, whatever BlackRock is going to charge for the ETF construction is a small price to pay to not have to deal with that. And they don't care about the ethos of it. They just want to participate in the returns.
I love that analogy. And not because I'm the first one to say Bitcoin is the digital gold. There are aspects of that. But as you say, there is a good reason to hold gold physically in your own safe if you can, frankly. But there's an equally good reason to hold gold even as an ETF, right? Or as a derivative. Because if you want to go in and out fast and your base currency is fiat, let's say US dollar, it's much easier to exchange your ETF back into US dollars than your physical gold bar that you need to get from somewhere. Then even find someone who's willing to accept 1 kilo of gold or multiple kilos of gold. So yeah, I mean, I think that's a good way to approach to see where we are and who's preferring what.
But if the bomb drops and we go into Mad Max world, that ETF doesn't. It's probably not gonna help you. Yeah. Sorry, Marcus.
No, but I think also like the narratives have also changed over time, right? The reason why people bought Bitcoin in 2011 was very different than 2020, right? And it has evolved also with the development of the technology, or even like Bitcoin itself sees various upgrades over time, right? And more things can be done, and I think that's also kind of important to keep in mind, right? Because I think you can easily detect somebody when they started getting involved with crypto if they tell you like, oh, I thought Bitcoin is this and does this, right? And I mean, I disagree on the gold thing, but that's different, So
what you disagree in the gold, in what sense?
Yeah, I don't think you need to hold it at all, right? I mean, if you have like $1 million in gold, I mean, and you need to leave the country, I mean, how are you going to get it out of the country, right? You cannot get it through the airport. And I think there is also like a strong argument why you should hold, let's say, this BlackRock ETF, right? Maybe it's a little bit more expensive, but you can also cross margin it probably, right? I mean, if I have my Bitcoin self-custody at home, I cannot like leverage this and do some other stuff with it, right? But if I have it in my broker account, right, I might have, can borrow against it, can do all sorts of things. And I think this is what some of these broker platforms like offer. I think it's everybody has like different solutions, and I think people need to find, where it fits into kind of their value proposition. But I think it offers like new opportunities, and I think this is what a lot of people have been waiting for. And I think we have known this from some of these ETFs that have been launched, in Canada, for example, but then US institutions don't want to deal in Canada either, right? So I think we're just getting, and I think at one point the Grayscale was holding like $40 billion or something. So it's a meaningful number.
Very meaningful, right? Yeah, absolutely.
So, and even like at 10 billion, it's just like a small compared to the global crypto market value, right? So it can be like 20, 30, 40, 50 billion even.
But it's not just the ETFs, right? It's also intermediaries, right? So let's think about FTX, where a lot of people lost money in FTX, and FTX was considered one of the most credible intermediaries in the market, right? They weren't regulated in the United States necessarily.
By who? I want to challenge that. No, really. I want to challenge that narrative, because, and I think I've been on this tip recently where I feel like there's, in this crypto community, we have such a tendency to go, well, everyone's saying this right now. And I think like, why? I think it's because you're saying it, right? So it's like FTX was considered one of the most crypto. By who? Yes, a lot of people trusted them, right? But it's not like there was ever like peer-reviewed research showing that FTX was like super credible, right? It was all a facade.
It goes to my point. It was invested by serious investors.
Okay, that's fine.
Right?
That's fair.
So,
okay. All right.
And I think people traditionally say, oh, it's got serious investors, or, oh, it's regulated by the SEC. I can trust it. The truth is you have to diligence your intermediary as well. Oh, I don't want the hassle of having to have my own private keys or, have gold in my wallet. Well, you also need to diligence the person who's doing all this for you, because if that blows up, whether it's Lehman or something else, then you also have a range of problems. So just because something is regulated does not mean that, I don't have to worry anymore. This is never blowing up. I think where I find regulation interesting is with gold. All right, do you want to hold it in your wallet, or do you want to hold it with, I don't care. In crypto, I'm not sure it's going to be that fungible between ways of custodying it. And at least in Singapore, private wallets are considered higher risk for AML. And so the ability to go back and forth, what is really crypto or not, I think that's really something to develop.
So what we see in the US, and I guess we will see something like this in Europe as well, is crypto is opening up to people who have regular access to, let's say, the banking system, because that's what it's for. I mean, if I have access to a Morgan Stanley private wealth management account or to a Deutsche Bank securities account, I love that. Yeah, because all of a sudden I don't need to change my system. I can be exposed to that risk or reward or whatever.
I don't need to buy a ledger.
Exactly.
Right.
Exactly. I don't need to. So my grandma doesn't need to take care of, okay, how what's that private key and what's my recovery passphrase and who's BitMEX and how does it work, right? So she just goes to the bank and says, well, my grandson is doing something in crypto. Can I have a Bitcoin ETF, right?
Yeah,
it's nice.
exactly.
And it will, what I meant, it will open up a whole new range of potential investors. At the same time, if you go back to especially Bitcoin, the idea was to give access to, let's say, a means of exchange or a unit of account or whatever you want to call it, right? I mean, it's not a philosophical debate in a negative sense. It's really a philosophical debate what it actually is. It was meant to allow people who don't have access to the banking system to participate in those, let's say, it's not a service, but in those functions. So frankly, this is what brought me to crypto. I did a lot of advisory work for central banks around the globe, in Malaysia, Indonesia, South America, Europe, of course, because that's where I come from. And the funny thing was when I started here in Southeast Asia, so it's not for Singapore. In Singapore, everything, it's basically paradise. But when I was in Malaysia for years and in Indonesia, I recognized 2/3 to 3/4 of the population don't have bank accounts. They go to remittance companies. But frankly, all have mobile phones. And not everyone, but many of those are involved in, let's say, supply chain in international trade and production chains, etc. So for them, if it's done correctly, it's really a thing. It hasn't taken off yet, right? I know all the debate about that, and if you look at El Salvador, and is it really a thing, blah, 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 yeah? But this is what brought me, frankly, into crypto. This is what brought me and attracted me to BitMEX, because that's where it originally came from, and saying, what can we build out of that? Yes, we need to balance in a way. The broader the adoption is, the more you need to take care of at least a level of KYC, AML, sanction screening, right? I mean, we learned our lessons. I mean, you've been part of that journey. So we've learned our lesson, and that's cool, right? I mean, that's not that we are completely against it, or I'm completely against it. But pivoting completely in the other direction means like, okay, what is it then, right? Is it just a number on a ledger somewhere? And I believe there is still more to come, especially for bigger ones like Bitcoin and Ethereum. And as you say, there will be more that come up with other use cases that will be used and that might be here to stay. Like, say, every cycle, another big coin to come, maybe something like this. But this is what I hope for the industry as well. So I'm happy with ETFs. I don't have anything against them. I just want to make sure that everyone knows what it's for and who's the target audience, right?
Yeah, absolutely. Yeah. Markus, do you want to add something?
No, but I think it's a niche. I mean, people always name the remittances as really, the big prize for crypto, right? Which is different than the whole DeFi, reinventing the middle and back office of the large institutions, right? But I think even like Tether has, mentioned several times, they actually eyeing this as a big prize, what they want to serve. And they think this is the market, the remittance market is like, the biggest market that they can serve. So maybe.
Who's eyeing it? What was it?
Tether, USDT.
Okay.
So that's what they kind of like want to go after.
You talked about DeFi, right? From a regulatory standpoint, is DeFi even real? Like, a regulator cannot regulate DeFi, I think, because basically whatever's decentralized, wherever those people are, they need to be regulated in their home jurisdiction. That is my initial thinking on DeFi. I'm willing to learn, and this is part of the reason I'm here, but
I think the key question here is, or the key word is really real, right? I think when you look back and, what's the key, I guess, what's the key number we need to look at when we talk about DeFi, right? It's TVL maybe, right? I mean, you look how TVL has come down from more than 200 billion to like 40 billion. Maybe TVL, is a sign that DeFi is, 40 billion is still money, but maybe it's not as real as it was, right? So maybe DeFi was real when Alameda was around, when 3 Hours was around, and they were borrowing it, and maybe it's just not real because there are not many real use cases, right? And I think that's where I would be saying, right, because it tried to be setting up like a separate like lending and borrow market, and as we have seen through all these different protocols, right, from Anchor and everything, they needed to be heavily subsidized, and only if it's subsidized people would engage with it, and if the subsidization money was like running dry, people moved on and wasn't really engaging with it. And I think here the key aspect really is that the market was not real so far, because again, when you take the incentives away, right, it's the same as your DBS offers you to switch credit cards, and they're giving you, I don't know, $100 Sing dollars or $100 to just, bank with them a little bit. As soon as this runs out, you just move on to the next one, right? And I think it's very similar. And is that then a real relationship, that you're banking with them shortly, and then you're moving up for your Asia miles to like a different one and everything? So I would say it wasn't real, right? And so far it's not real because it has not been integrated.
Hard disagree.
Well, like, I think of Citibank as kind of decentralized because they have operations all over the world. So you may deal with Citibank in Singapore or US or anything else, right? For a platform that says it's DeFi, that is completely fine, but somebody is maybe doing a regulated activity somewhere, right? And to that degree, you're going to have people responsible for the conduct of their part in the platform. I think that's where regulators will go.
So you said Citibank is decentralized or centralized?
Decentralized, right? They have operations everywhere. Decentralized, strongly DeFi, Citibank.
Well, this turns very interesting for me because it touches some of my convictions about the space. I think DeFi is real from a conceptual standpoint, and my I'm a banker by nature, so I was socialized banker. I'm not in a bank for decades now, but I was brought up as a banker. And when I heard about DeFi, I really was like, wow, that's really it. And it comes from one thing. So I always recommend looking at transaction cost theory. That gives you a lot what crypto actually is about. Not technologically, not from an engineering standpoint. Crypto, with all the governance around it and the DAO thing, actually pushes the boundaries of how efficient decentral organizations can be. That doesn't mean that all of a sudden everything is decentralized. That doesn't work. It's not everything. The whole world is all of a sudden decentralized and we have bottom-up democracy everywhere. It won't work. Frankly, that's my conviction. But it pushes the boundaries towards the decentral world. And what is it then? So DeFi isn't for everyone as well. Because if you use a DeFi platform, you need to understand the product. You need to diligence everything there. You need to be able to read, frankly, the smart contracts behind it. And you need to monitor it on a regular level. So it only is usable for you in an efficient way if you do that stuff day in, day out. Then DeFi is really your thing. And that was a misconception, I think. I wouldn't go, maybe I'm too old, but I wouldn't go for a fully decentralized bank account in fiat currency. I just won't do it.
For the record, Stefan, how old are you?
46.
I wasn't expecting an answer. Okay. All right.
No, that's fine. Okay. I'm the old white guy.
Certainly old for crypto.
Yeah. And the second thing is, and
I think we all are.
And the thing here is where the regulatory scrutiny and difficulty comes from. What a DAO actually is, it's an old concept. It's what cooperatives are. You have cooperatives in many jurisdictions, especially Europe is strong on cooperatives. You have even cooperative banks. The second largest bank in Germany is a cooperative bank, which you could really classify as a decentralized organization because it's not really one organization, it's a multitude. And they have members, so to say. So it's not close to a DAO technically, but from a governance perspective, it's very close to that. It works because it's in one jurisdiction and regulators feel fine about it. But what DAOs can do and crypto can do is you can all of a sudden, if you do it right, and no one has, or hardly anyone has done it already right, you could export that to a cross-border cooperative, which even in real world, it wouldn't work. If you have a cooperative that's operating in Singapore, in Brazil, and in the UK, for example, no one would become a member because you don't know what is what is the law you're following. And if you say, okay, we follow now Singaporean law, I don't know whether they have cooperatives here, but let's assume for a moment. I mean, you know better. Would the Brazilian member really feel comfortable in going to a Singaporean court? No. Right? So the DAOs can automate this, so which comes to this code is law conviction. And the second one is it needs to be predefined. So it reduces, a DAO cannot deal with fuzziness. The moment you have fuzziness in a DAO, it doesn't work. And this is the difficult thing. So you have a technological tool which enables a big thing, but it requires a lot of people that are non-technical to make it work. And then you have that legal thing where, let's say, if you do that then on a DAO side, what do the Singaporean authorities think about it? What do the Brazilian think about it? As long as you're small, no one cares. But the moment you get big and you control a certain portion of a certain market, they will care. And this is the difficult thing. So technologically, conceptually, I love DeFi and I think it's real, but we are not there yet to have found that use case that you really can grow over and on top of a fraction of a market.
And I think don't forget the exploitation of the DeFi, right? For example, where certain tokens were like, pumped up to, massive volumes, and then you could borrow against those tokens, and only, then you take the money out, and then of course those tokens collapse, but you have the collateral, and then, the hacker had the collateral and moved away and all these things. So there's a lot of exploitation, which goes back to like a lot of those other, non-Bitcoin, blockchains or solutions that really have been also a lot of network problems, and I think that's also where people lost a lot of trust. So it's not just one aspect. I think there's many aspects that didn't really work.
Yeah, that's fair. I mean, we've seen problems in the traditional finance space as well, once or twice, I think, right? I think my response to this issue of is DeFi real, it was 200 billion TVL, now it's 40 billion. Look, I think for me, there was definitely mispricing across the crypto industry previously. And the fact that there are still 40 billion TVL in DeFi, to me, is a testament to the fact that it is real, right? And I think it's important for us to start seeing it that way. I think very much to your earlier point, right, is that the fact that there's still $40 billion in there, to me, suggests that it's not going away, right? For everyone that says like crypto is dead, Bitcoin is dead, sell me a Bitcoin for $100, right? Like you can't. There's no way. We're not. We're about less than halfway from where we were at the top, but we're a lot higher up than we were even just a couple of years ago, right? So I think these various assets are finding their kind of correct pricing, which is a healthy kind of thing. I mean, you saw some of the market cap of some projects and coins was just really ludicrous, and as exciting as I think it would be for us to see more enthusiasm, we're just trying to figure out what makes sense now.
Yeah, but I think these events, right? Again, not starting with BlackRock again, but you had the CME futures being issued in December 2017, right? So very close or around the previous peak of the bull market, right? But of course, what it did, it brought a lot more people in, right? Because suddenly everybody who has a like a TradFi futures account could suddenly buy Bitcoin futures and Ethereum futures. So it created this awareness, and I think this. And there's of course a lot of pushback from the crypto communities. Oh, we don't want the money from those guys. We want really the hardcore, crypto guys only money. But I think what it does, it creates more awareness. It brings in more people. And again, the numbers are already quite high. With like 420 million people, and maybe this brings another 100 million people in. And I think some of those people will go down a little bit deeper from Bitcoin to Ethereum to the altcoins to something else, right? And I think it just that experience and this noise around, does a lot as well.
When I was saying I wasn't sure if DeFi was real, it's nothing to do with how much money is in DeFi. It has everything to do with if you and I said, let's go launch a DeFi platform, we don't need a license because we're DeFi. I don't think that is real. I think depending on how you set it up, whoever is making the most money really has to take a hard look about whether they're conducting a regulated business in their home jurisdiction. Binance had gotten all these licenses and now is deregistering from everywhere. I'm kind of curious if anybody has thoughts on that. I mean, I've been seeing other places where they are just withdrawing. I think the Netherlands was last week, I think. I don't know if anybody else is more current on it.
Well, but the question is, getting a license to do what, right? And are they really pursuing something, right? If I'm getting a license to do, I don't know, let's say investment research, but I'm, running a hedge fund. I mean, I can say I'm licensed, but I'm not licensed to what I'm actually doing. And I think that's a little bit, it seems what they were getting is that they were getting licenses, but that wasn't really, associated with their core business maybe, right? And that's why it's easy to kind of withdraw.
Which is a little bit of a game that happens in this industry, right? People go, I'm licensed. So what's your license? Well, I have a food service license, right? But yeah, I mean, I think, but part of it is that it's just so tough to get the appropriate licenses. And in many cases, there just aren't the appropriate licenses, right? Like they just don't exist. And a lot of the regulatory framework for stuff that what we're doing doesn't exist. And I think behind that, there's a bigger question. What do you guys think about this? I think the core problem that we're facing with all of these regulatory issues is that the governments around the world really don't know what they want. They haven't figured out, do we want people to have the kind of financial freedom that crypto offers them? And they don't want to say, you know, they kind of don't want to go on the record either way, right? Nobody wants to be the politician that says, yeah, financial freedom is a human right and I support it. And now that the technology can create it, let's embrace that. They also don't want to say, absolutely not, we need to be in control of the money, right? So what we get is this system where nobody kind of knows what's okay, what's not okay. There's this whole big bunch of gray area.
Taking Gary Gensler's word that this is sort of like a scam and it doesn't lead to anything and therefore it's just not real. And yeah, I mean, it's sort of like a trading card market, which doesn't do anything for the real economy. And I think that's what the regulators' view mainly is. And I think that's why it has been relatively slow to provide, I guess, more regulatory enforcement that it's kind of like what some of the crypto people were asking for, right? I think people on the crypto side is always asking, okay, we want regulation, well, but not the regulation that the regulator is offering. And I think that's a little bit kind of where the mismatch is, right? I mean, there's so much debate, of course, right now about what is the security or not, right? I mean, I cannot just go out and let's say launch a hedge fund and raise money from everyone and have like advertisements in the newspapers and everything. I mean, this is just, there's like some financial laws in place. And I think the crypto industry is just trying, to be compliant because they don't think these laws apply to them because it's like a special thing, right? But in the end, the regulator looks at it, this is not a special thing, this is a security offering. And yes, maybe the Howey test needs to be revived a little bit and it should be something else than a law that's like, 80 years old or something. But in the end, it is sort of like a security offering. And I think really, the crypto firms don't want to fall under these things, right? I mean, at the same time, I strongly disagree that issuing, a 1,000-page report about token ABC that says like on every page, this is risky, you can lose all your money, as it has been done with a lot of the SPAC issuance, right, that we see in the traditional market over the last 2 years where, a lot of people lost a lot of money too, right, where, a lot of these SPACs are down, 70, 80, 90%, if not more, right, even in Singapore, our favorite, ride sharing app Grab, right, lost a lot of money too for a lot of people that invested there. So even a 1,000-page, prospectus, highlighting those risks is not really worth the paper it's printed on. But I think the regulator, doesn't see the value in it, and I think that is the issue.
I'd say I agree to 50% with you because it's for me, both sides are right because it depends on how you look at things, right? If you change the way you look at things, the things you look at change. And with crypto, it's the same. If you look at crypto, if you look at what's going on through the lens of, let's say, classical, and I'm a semi-expert in that by nature, of banking regulation, you look at that in exactly the way that comes out in the US and to a lower extent in Europe. If you look at crypto from the lens of crypto, you don't arrive at completely different matters, but you approach it in a different way. To give you an example, so not to counter it, but to give that perspective. If you trade with one of the established crypto derivatives exchanges,
like any in particular?
Sorry, no, but I mean, take the other one. I mean, you can trade the same product. I mean, they all were invented by BitMEX in a way, and they were copied. So it's kind of an open source project. In a sense, yes, it's not bad. Actually, it served the proliferation, right, and it served good. So no complaints about it. But if you look at that, if you trade a purple future And you go to a regulator and say, yeah, we offer derivatives. They oh, wow, you offer no, you can't do derivatives with retail investors. And you like, I mean, I know both sides, right? But why? Yeah, it's a leverage thing. So that's bad. So they lose all of their savings and they will be bankrupt. And we're like, no, they can't lose more than they put in. It's coded into the system. You can audit the system if you want. No, but you offer 50 times leverage, or I mean, we have been famous at some point for offering 100 times leverage. 100 times leverage. They all go down the drain. I'm like, no. Do you know how it works? Yeah, well, yeah, you trade that and then you get a margin call and then your house is foreclosed. No. You put something in your wallet and latest every 8 hours, you're basically settled in an intermediate level, to explain it more for the financial services guys. And if you don't raise your funds, you're liquidated. I mean, that's a bad word in crypto, I know that, but you're liquidated. Actually, it protects you and it protects the other side. If you would have that in classical, and I work for a large stock exchange operator. If you would have that, you could save all the clearing funds. It would be much easier, and you would even have circuit breakers. They don't get it. It's not because they're stupid. That's not what I'm saying. But they are so into their perspective, they can't think that there is a way to do it in a different way.
It's a culture. It's almost a cultural thing.
Yeah, and then it's not even acknowledged. Or, okay, do you have audit reports? I mean, nowadays we have reasonable ones. But in the former times, no, we don't. Yeah, but then all what is in your financials, it's not there. No, it's not. We have proof of reserves and proof of liabilities, right? We nowadays offer that twice a week. So you even have a time series, and it covers more than 90% of our assets. So you basically have a kind of a it's not the same, I know that, right? But it's a semi-balance audit that every user can redo on its own twice a week. If you go into a banking balance sheet or even regulatory reporting with regulators, you can look that up for the last quarter after the quarter is already gone for 6 weeks.
Yeah.
Right. It's not that I say it's right or wrong, but it's not even acknowledged yet.
Yeah. I think, just to, we've been talking a lot about like the regulators, they don't see the value in crypto or whatever, right? Why do I care? Like, is that their job? I don't think their job is to determine the value of the underliers that, the system, right? Their job is to keep people safe and to make sure that markets are, being managed in a legal way, right? They shouldn't have any judgment on what's being traded or like the platforms themselves.
I don't think the regulator is really, even they say it a lot, protecting really, the retail, the little guy. That's not the issue. And I think I go back, for example, for the, US after Luna blew up last year, it was, Treasury Secretary Yellen who was like saying, well, yes, there's a lot of losses, but it's not threatening the US financial system. And I think that is kind of like how they look at it, that crypto actually had become so big. And after FTX, I think there was a realization that actually the numbers are much bigger than they thought in the system, and that this could actually threaten the system, because it went down then, with Silvergate Bank, with Silicon Valley Bank, with Signature Bank, that those entities were moving, $200+ billion a quarter around the internal transfer system with these crypto firms. And I think that's when the regulator says, well, these numbers are suddenly, growing exponentially, and we don't really know what's going on. And to stop this, I think that's when they really stepped in. It's not really to protect, your $1,000 or your 500, in some coin. It's really that suddenly these banks that are FDIC insured, that the taxpayer is actually liable for them if suddenly, $100 billion like disappear. And as we know, for example, FTX was giving I think $65 billion in credit to Alameda. I mean, these are suddenly like real big numbers. And I think after that, the regulator kind of was starting to get really worried and really just kind of like, put out the fire, if you might say, in an aggressive way.
Sure. And you can appreciate the responsibility that they have to make sure the system doesn't break down, right? Is but it still feels like kind of personal in a way sometimes, right? Like it feels like the US regulators are trying to kill crypto. There's people that say that that's not the case or whatever. There's all speculation about choke point 2.0. You guys have all heard, right? It looks real to me. That's not something that we've seen in other similar instances, right? Like the blow up of Lehman and Bear Stearns was much bigger than FTX. But we don't see them saying, mortgage-backed securities are still a very popular instrument, right? They didn't say, "Oh, guys, we got to get rid of these CDOs," right? Why is it so personal with crypto?
The one thing I'd say when we talk about crypto, there are the coins, there are the issuers who are selling it, and there are the intermediaries who are transacting in it. All three could argue they are crypto, right? I don't think the regulators care about the coins. And if some project just gave away their coins and wasn't selling anything, the SEC couldn't say, wait a second, right, to the issuer, you can't give this away. Once you sell it, if the SEC thinks it's a security, then there are anti-fraud provisions, right, that the SEC is protecting to make sure someone did not make something up and is not misrepresenting the value of the security. So that's where they plug in from the issuer side. And then the intermediary, the exchange, okay, well, if you want to transact in these tokens and you're going to be selling them, then we have to make sure that you are properly, licensed and have adequate reserves and are custodying it in the way that we treat everything in this asset class. So that's where I think they're not after the tokens themselves. Like they're fine if Bitcoin is worth a lot of money, but they are regulating the people who want to sell it and profit on transactions.
I mean, the interesting aspect is, the 2017 bull market. Do you know why it peaked, why it stopped?
The 2017. Well, this is a little before my time, before my real focus on the area.
It's exactly the same issue right now about what is the security.
Is China,
the ICO? No, but it was like the ICO offering, but it was around that these ICOs were actually security token offerings and needed to be therefore approved and regulated, and since they weren't, it kind of like all stopped, right? And also in 2013, you had in the US something like the Financial Crimes Enforcement Act being in place. This is where, the whole the BSA, the Bank Secrecy Act came in play. That, you might.
Yes, we're familiar with the BSA, Marcus.
Yeah.
Yes.
No, but this is when crypto moved more or less, I think, from the US into Asia, right? It was pushed because of regulation. And this is really, no matter what your view is, and that's what, the message I took away is really that there are so many people interested in it and involved in crypto. And as you said, the regulator is not there to regulate me, and I don't want this. I want to find my own way. And I think there's so many millions of people involved now, and they actually just want this. And I think the regulator could have maybe killed it years ago, but not anymore, because there's just like so much interest in it. And this is what I'm just saying, that going forward, it will just move to the jurisdictions where it's most friendly. And I think we're sitting here and we're not debating if it's going to disappear or not. And I think 5 years ago, we probably would have said, is this the end of crypto?
I think
nobody asked, is this the end?
Yeah, I think I disagree. I think that there's a little bit of arrogance on the part of governments. So we've seen this before with different governments, where I think that they think, what, if I really come down on it, I can kill it. Yeah. And I think they don't know that they can't kill it, but they can hurt it. Right? They definitely can hurt it.
Yeah, of course.
So my sense is that we'll get out of it, but from the government's perspective, I think they're trying to kill it, to be honest. Yeah.
There I have to disagree. If you talk about the US, they don't kill crypto as such. They turn it, as I said, into just another asset class as real estate or equities. That's what they want. And they want to have it. I mean, I'm not the US government, so this is a little bit of speculation, but it feels like they want to drive it to 90%, being 90% run by classical financial institutions. Then they're happy with it.
Okay, that's fair. All right.
For fine. Maybe the reasons you say. There are other reasons, right? I mean, I would love to talk about BSA and that stuff. I mean, we have learned our lesson, right? I mean, we have been positively spoken on the forefront of this. We run full KYC since 2021. And it had an impact, of course, on the business, but we are there. We have no de minimis thresholds for KYC. We have full sanctions coverage, right? So we see and we know firsthand what it means. What I always found interesting about that is how they did it. Because our founders have been sentenced for something that at the time that was in question, this wasn't even in place. This is the funny thing. So not debating about the core subject as such, that it goes into that direction. I mean, we have discussed that. I think this is for the bigger jurisdictions, for the important, well, not important, this is arrogant, but for the bigger jurisdictions who have somehow stable financial systems and play a role in global trade, it will go all in the same direction. But it's differing in terms of, do you want to drive it completely into classical financial services institutions, or are you comfortable with some smaller players trying or innovating? And I guess there Asia is a little bit more, at least Hong Kong. I mean, mainland China might be a different story, but they're happy with Hong Kong serving as that innovation hub.
I think what we need is we need like one team, protocol team coming out and saying, okay, SEC, here's our application for the launch of our token. And then kind of like, oh, after 6 months, nothing came out, we have provided you everything and you're not really cooperating. But I think we somehow are not at this debate. We're just saying like, oh, they want to regulate us and we don't even want to be regulated, and that's why we're not going anywhere. But I think if there would be pressure on, everything, the application is too expensive or too lengthy or not efficient enough, I think that kind of needs to be done, because again, I think a lot of people are interested in it, and it's just really maybe the administrative side that I think needs to be fine-tuned a little bit.
Cool. Well, look, guys, I think we're running out of time for today, but I'm really excited to have had this conversation. I'm excited to keep in touch with you all. Quick rundown. Okay, guys, again, that book is Crypto Titans, How Trillions Were Made and Billions Were Lost in the Cryptocurrency Markets, a fantastic historical view of the first 4 cycles of crypto, catching us up to where we are now, by Mr. Markus Thielen. How can people find, I guess they just Google the title I just read. We'll include a link in the show notes as well so that people can buy the book. It's fantastic. Mr. Stephan Lutz, thank you so much for being here. Of course, BitMEX.com, available only in certain regions. But if you are in one of those regions, great place to trade crypto derivatives. And we have a course that we've produced for BitMEX, which really walks you through how to trade crypto derivatives on BitMEX really, really well. So if you are able to trade crypto derivatives legally in your country, we'd love to see you take our course at least and give it a try on BitMEX. Chris Holland, if you want to start, I don't know, how can I show you, Chris? Tell me.
I'm going to have a link for the book on our website. We'll add that.
Okay. What about you, though? How do people reach you?
Website, hmstrategy.com.
Okay, great. So if you're doing anything with crypto, I think it's mostly crypto people watching this anyway. If you need some advice, you need to talk to a lawyer, as often you do in this industry. I hope you'll consider Chris Holland. We'll put his info in the show notes as well. Finally, of course, I'm Lawrence. Easiest way to get in touch with me is on the XD Academy campus Discord. Come and talk to us. We'll be really excited to meet you. Thanks, everybody.